Welcome back to Institutional Trading YouTube channel. This is where we unlock the secrets of smart money trading. If you are new here, make sure to hit that subscribe button and ring the notification bell so you won't miss on any of our future content. In today's video, I want to talk about the smart money technique. What you'll be able to learn by the end of this particular presentation: what is smart money technique, types of smart money technique, the significance of smart money technique, where and when to check on the smart money technique, and how to trade the SMT effectively. What is smart money technique? Smart money technique is a technical tool that we use in price charts to help us understand the smart money accumulation and distribution programs by comparing the lows and the highs of defined asset classes. And what you're going to do is by checking the element of the cracking correlation. Oftentimes, these particular asset classes, whether they are inversely correlated or directly correlated, at some point they tend to be possessing that particular cracking correlation. And that particular cracking correlation is what will be able to form the basis of this particular smart money technique. This SMT, or the smart money technique, is applicable in any time frame, whether it's on the 1 minute time frame, whether it's on the 15 minutes time frame or the daily time frame, whichever time frame, it is still applicable. Price is price, and these particular patterns, they're generic, and there is no sense of which time frame is the best when we are looking at the smart money technique. Mostly we utilize it for trend confirmation, either for reversal or continuation, but most of our bearing will be on the reversal part of it. This smart money technique is also called the smart money tool or the smart money divergence. This is the only indicator that we require. We don't require any special and external or strange indicator whenever we are trading. Remember, the core basis is tracking the footprints of these particular institutions, and they'll be able to leave them behind. And one of them is by this particular smart money technique. So you won't require any special, any external, any strange indicator. The only indicator that you require is price. With this tool, we don't require any strange indicator, and our only indicator is price. So when you've conditioned your mind and thinking in the narrow line of the 2% of the traders, then you'll be able to see these particular patterns and ride with the cocktails of these particular institutions with ease. The main intention is to see you make money, but be able to make money only if you ride with their cocktails. Now, types of smart money technique. We have smart money divergence with a benchmark, and we also have the smart money divergence with a closely correlated asset. Now, for the case study, I'll be able to narrow my focus to the dollar index, Euro USD, GBP USD, but I'll be able to comment on others as we progress, because this particular smart money technique is applicable in any asset class. The whole marketplace is interconnected, so it is applicable to any single asset class out there that we're trading. But I'll be able to narrow down my focus to Euro USD, GBP USD, and the dollar index for this particular presentation, but I'll be able to comment as we progress. Our benchmark for this particular case is the dollar index, and Euro USD and GBP USD, of course, they are closely correlated. So I'll be able to narrow down my focus with the dollar index, Euro USD, GBP USD, so that you'll be able to get it more precisely. Now, this is the dollar index, and this is the Euro USD. So I want to talk about the smart money technique with the benchmark. This is the DXY, and this one is the Euro USD. You understand that these two, they are inversely correlated, whereby if the DXY makes a higher high, you're anticipating this particular Euro USD to make a lower low. This is not the smart money technique. This is not the smart money divergence. There is no crack in correlation over here. This is when everything is ideal within the marketplace. This is when everything is symmetrical. So when the DXY, you understand that when the DXY makes a higher high, Euro USD should be able to make a lower low. This one indicates that the overlaying bullishness in the dollar is still active, and the Euro USD, you're anticipating more downside, more lower lows to be found because everything is symmetrical. Remember, this is not the crack, right? DXY made a higher high, Euro USD lower low. This is very symmetrical. But the DXY, the same DXY and the same Euro USD, the DXY has made a higher high, like here. But instead of this particular Euro USD making a lower low, it failed. It made a higher low instead. This is the crack in correlation, because in the normal market condition, when the dollar index makes a higher high, you're expecting Euro USD to make a lower low, but it failed. So one of them can fail. For this particular case, I decided to use Euro USD. And you'll be able to flip everything all together. When the DXY makes a lower low, you're expecting this one to make a high high, but one of them should be able to give you, should fail to give you that particular normal condition. Just flip. I just want to save on time. This is the crack in correlation, because at the time whereby DXY made a high high, you expected this one to make a low low, but it failed. It gave a high low instead. This is the crack in correlation. This is the smart money divergence. This is the smart money technique. This is the smart money tool between Euro USD and the DXY. This one indicates this smart money are actively accumulating more long positions in the Euro USD. Hence, you're anticipating more the reversal to the upside. You're expecting Euro USD to be stronger, right? So this will be able to give a reversal to the upside. This one will be able to give you a reversal to the downside, but the rally above this particular short-term high on the DXY now was meant to take out liquidity for it to reverse, to give us a sell program. A sell program is whereby the market makers tend to sell above an old high. But either way, it will be able to reverse to the downside, and this one will be able to give us a reversal to the upside. This is the cracking correlation. This is the SMT, divergence with the benchmark. And the benchmark for this particular case is the DXY. Also, want you to take note of the one that gave us the failure swing. The one that actually gives us the failure swing is the one that the smart money participation resides most of the time. And they were actively accumulating more long positions in the Euro USD. Most of the time, usually the leading indicator. And take note, because I'll be able to comment on a few things as we progress. Now, I want to talk about the SMT with the closely correlated asset. You understand Euro USD and GBP USD, they are closely correlated assets. They are closely correlated in the sense that at some point they tend to be moving in a similar fashion or in tandem, whereby ideally they tend to be making almost the same swing points. So when Euro USD makes a higher high over here, we also anticipate GBP USD to give us the particular higher high formation. Why? Because they're closely correlated asset. This one indicates that the predominant trend is still active, is still strong, the bullish side of it. We're expecting both of them to give us more higher highs. There is no crack over here because everything is symmetrical, everything is ideal, everything is normal. But for the crack in correlation, for the SMT, we stock the crack in correlation. Now this is still the same Euro USD and GBP USD. That is Euro USD and this GBP USD. Now when this one makes a higher high, you're anticipating GBP USD to make a high high. This had to go beyond this particular high, but it failed. That is a crack. Instead of giving us a high high, it made a lower high. That is a crack in correlation. So one of them can give us that particular instance. Either way, GBP USD can still make a high high, but Euro USD failed to make a high high. Just look for one of them to give you the abnormal condition. So Euro USD made a high high. You anticipated GBP USD also to give us a higher high, but it failed. It made a lower high. There is the crack in correlation, and that is the smart money technique, the smart money tool, the smart money divergence between these two closely correlated assets. And I also want to take note, GBP USD gave us a failure swing. Now, with this particular crack in correlation, the smart money were actively participating on GBP USD as compared to Euro USD. The rally above this particular above this particular short-term high on Euro USD was meant to take out liquidity before we drop, before we reverse to the downside. So this is the crack in correlation. This one equates the anticipating bearish price action and the reversal to the downside. This is the SMT with a closely correlated asset. Now, most of the time, the one that gives us the failure swing, this is a bonus point. I want to mention it in any segment of the bonus point. The one that tends to give us the failure swing most of the time will be able to permit imbalances setups, whereas this one will be able to permit turtle soup setups. Now, what is the importance of smart money technique? We can use the SMT as a context for directional bias. And this is when the market ideally is giving a context, the market is reacting into a significant PD array, maybe an order block or an imbalance or any institutional reference point. And you spot that particular element. It'll be able to give you a clue that you'll be able to be shifting your gears from one side of the marketplace to the other. Maybe if the market dived into the discount array and you spot that particular element, it can give you an indication that you'll be able to be shifting your focus from the bearish price action to bullish price action. Whereas at some point, maybe the market narrative can't be clear and there is this particular element of the smart money technique, you can as well utilize it for the context, for directional bias. Now we can use the SMT for trade selection and filtration. Why should you trade Euro USD as compared to GBP USD? And that will be able to frame the basis of the relative strength analysis in line with the one that tends to give us the failure swing. That is where the smart money participation resides. It will be weaker or stronger depending on the SMT. Now we can use it as a qualifying tool. Maybe you had a narrative in play, maybe the market maker buy model, and you spotted this particular bullish smart money technique. It's just qualifying whatever you had in play as an extra confluence. And you can as well use the SMT as a timing tool for entries and executions as well. Now, when, where, and when should we check on the SMT? Ideally, the SMT, you should be able to check it in any institutional reference point, institutional key levels, an order block, mitigation block, breaker block, imbalance, all volume imbalance, all those particular institutional reference points. But for me, I narrowed down my focus to 3 areas: an order block, an imbalance, and points of liquidity runs. In other words, if the market has taken out a buy side liquidity pool or sell side liquidity pool, I have to stock on that particular SMT. And when should you check on this particular SMT? Every single day. This particular SMT is very, very important in my day-to-day trading, because every single asset class thereabout has its related asset. The whole marketplace is interconnected. And for instance, gold, I check silver, GBP USD, Euro USD, Aussie, Kiwi. Every single asset class, you can be able to compare it, and get this particular instance of the SMT. Let us look at how we can be able to trade this particular SMT effectively. I want you to understand that in as much as you want to utilize this particular SMT, having a bias in mind in regards to where the draw is, or where the market is likely to be headed in regards to rebalancing aspect, or where we are in regards to the seasonality aspect of it, or the hedging program, the narrative that tend to formulate the bias for us. It's very, very key. So bias is a bonus point for us, because when the SMT is in line with the predominant order flow that you anticipate initially, it boosts the odds in your favor. Now, in one of my recordings, I mentioned that I anticipated bearish DXY, and I anticipated it to reach for this particular imbalance, and ideally to check out this particular low for this particular year. And I mentioned it. I'll be able to link it to this particular video, so you'll be able to refer back to it. It was a review on the dollar index. Now, let me overlay GBP USD with this particular dollar index so that you'll be able to see something. Now, this is the DXY, the top chart, and the bottom chart is GBP USD. You understand that this particular two, they are inversely correlated. In other words, if the DXY is bearish, GBP USD should be bullish, and vice versa. Now, I want you to look closely between this particular swing high and this high on the DXY, and this particular low and this low on the GBP USD. Now, if you've looked keenly, the DXY made a high, took out this particular high. Because it is inversely correlated with GBP USD, you're expecting GBP USD to make a lower low instead, because they're inversely correlated. But remember, for the SMT, we look for the crack. Instead of GBP USD giving us a lower low, it failed to make a lower low, but it decided to make a higher low. That is the crack in correlation. That is the SMT. That is the smart money divergence. If the DXY makes a high, you are anticipating GBP USD to make a lower low for a normal market condition. But remember, for the SMT, we look for the element of the crack in correlation. Instead of GBP USD making a lower low in return, when DXY made a high, it made a high low. That is the crack. That is the SMT. This one indicates that we're anticipating now GBP USD to give us a reversal to the upside, and the DXY, the reversal to the downside, and that is what happened. Now, this one gave us the indication number one of a potential reversal from bearish to bullish on GBP USD. And of course, on the lower fractal, on the lower time frame, we're able to understand that there is a fractal over here, a market maker by model. So it was also validating this one as the smart money reversal for a market maker by model. And of course, I have another video about the market maker business model. You can be able to watch it. So if you dive into the first time frame in this particular fractal, you'll be able to see that there was a nice market maker by model. Now, this is the smart money divergence with the benchmark. Sorry. We had the DXY and GBP/USD. Now, in the same fractal, in the same area, I want to talk about the closely correlated assets, GBP/USD and EUR/USD. The top chart is GBP/USD and the bottom chart is EUR/USD. You understand that the two, they are closely correlated assets. They tend to be moving in a similar fashion. So the bottom chart is EUR/USD. It made a lower low. When it makes a lower low, you also anticipate GBP/USD, the top chart, to make a lower low, but it failed. Remember, for the SMT, we look for the crack. It made a higher low instead. What does that equate to? A crack in correlation. That is the SMT. This only indicates that you should be able to anticipate both of them to reverse to the upside. The decline below this particular low on EUR/USD was meant to take out liquidity, but it was destined to reverse. It was more of a turtle soup scenario or a stop hand scenario. Now, I've mentioned that the one that tends to give us the failure swing like this one is the one that the smart money participation is active. So it will be able to be strong for that particular matter because we are bullish. So if I were to be trading, I could have selected or elected to trade GBP/USD because I understand for bullish price action, it gave me the failure swing for the SMT. And I'm expecting now it to be much stronger as compared to EUR/USD. That is called the relative strength analysis. And of course, for the entries and everything should be able to be in line with the German price theory. And you have to combine this particular approach with other tools like the market maker business model and more for you to at least have a concrete idea of what the marketplace is like. Feel free to join my Telegram channel. You will be able to find it in the description, whereby I'll be able to be talking about these particular modules and how you'll be able to be trading them again so that you won't be able to miss. Now, with this smart money technique, you won't require any of the lagging or the leading indicators. This is the only indicator that you require. This, and you've seen that it is only price that you're only reading. Price is the only indicator that you require. With SMT, you'll be able to unlock more, and it is part and parcel of my trading. Ladies and gentlemen, that is a wrap on today's deep dive into the smart money technique. I hope you found this video insightful and that you're ready to incorporate it into your trading method. Mastering this model takes practice. If you utilize it appropriately, you'll be able to significantly improve on your trading decisions. If you enjoyed this video, don't forget to give it a thumbs up. Your support helps the community and the channel to grow and reach more traders like you. Also hit that subscribe button and ring the notification bell so that you will never miss out on any new content. I'd also love to hear your thoughts, also experience with smart money technique. Drop a comment below and let's get the conversation started. If there is a specific topic you want me to cover in a future video, let me know.